All right, let's jump into it. Bit of a weekend review, so give us a chance to sort of see how the market sort of closed up for the week, and sort of see if we can sort of pick out some plans, some attacks for sort of what we could potentially be seeing coming in the next couple of days and that. So look, I'll start off with DXY because this is obviously the big sort of driver. It's the big talking point. Like 90% of the time, everything seems to be 90 or 10%, but 90% of the time, this is the big driver and this is the talking point of it all. And of course, you know what I mean, like rate cuts has been the conversation for a while. Now it's pretty much, you know, 99%, 99.5% sure that the cuts are coming. So now the questions have gone to sort of whether it's going to be a 50 basis point cut or a 25 basis point cut. I think, like I've said a couple of times now, I think 50% is just too big for the first one. I don't think they're just going to jump in full hog. I think, they're going to sort of like, they're going to be very cautious about these things because, they talk about sort of previous times. Sorry, I don't know my history well enough with these charts, but maybe the 70s, the 90s, these kind of periods. I think it was the 70s or so like this, and they sort of had similar sort of setup in that. No doubt somebody could probably correct me on that, but the idea was basically that they cut the rates too quickly. And when they cut the rates too quickly, they had a second wave of inflation that was even worse and dwarfed the first one. And they're up to like sort of 15% or something like this. So I think sort of like, those kind of history lessons people are going to be very wary of, and they're going to be sort of thinking, well, you know what I mean? Like what's the advantage at the moment to going sort of full guns blazing 50 basis point? Like you're seeing the economic data come out for the US, and it's not sort of, kicking goals like unbelievably, but it's not sort of drastically bad. And the thing is with it, sort of like, so they can be cutting under different circumstances. And this is the soft landing, hard landing kind of idea with it all. And the soft landing is the idea that sort of like, they're sort of releasing a bit of the pressure. So they're sort of saying, hey, look, you know what? Inflation's coming down. It's moving into our sort of band of our target and it's on its way there. So now let's look at the sort of recession side of stuff. And let's take a bit of the pressure off the businesses. Let's try and sort of like, help the economy not just crash and burn. Because the thing is, remember, when you sort of cut the rates, you're stimulating the economy. Like companies are going to borrow more, they're going to invest more, they're going to hire more people. If you play all that out, production goes up, GDP comes up, and it drives all that sort of economic data back up. And so when it's really bad, they need to cut more, so people will borrow more, so people will then hopefully sort of given that sort of scenario that I just sort of played out a second ago, that'll sort of trickle down and it'll really sort of turbocharge, kick the economy. Like think about the when everything stopped, everything shut down. That went to super super slow because obviously nobody could work. All these businesses were closed. Everyone was staying home. They needed to really sort of get people going. So they sort of went bang with the lever and they printed money. They sort of cut rates, all these kind of things to sort of super turbocharge to sort of get everything back up. And obviously they overshot that. Well, everybody, all the economies did, but we're not in that kind of scenario at the moment. And that's my point that if it's a 50 basis point cut, it would be because, we're seeing super weak economic data. We're seeing sort of like things crashing and burning. And they really need to pick the nose up on it. But, you're still seeing data come out, which is, what I mean? Like it's not too bad for the US and that. So like GDP, I think was up last week. PCE came in sort of, I think it was as expected. But so these sort of things are showing that sort of like, it's not really in the super dire straits to warrant a 50 basis point cut on the first go. So that being said, I think a lot of this move, obviously, as we've been seeing it sort of come down for the last couple of weeks or so, is based and predicated on the idea that cuts are coming, and then these last sort of bits, like you start to, if you pay attention to what they say with all the news and the data, they go, okay, look, now it's about 50 basis point cuts, and or like they drum this thing up. And my feeling is that the reason they drum it up is so that sort of like, all of a sudden 50 basis point, blah, blah, blah. Oh, well, it's actually not that bad. It's only 25 basis point. They try to sort of muddy the waters a little bit. So, when you get a 25% or 25 base point cut. It's not like, oh my God, they're cutting and they're having to do this. It's like, well, they could have done 50, but they're doing, excuse me, 25. It softens the blow a little bit for it. So, it's kind of like media driven narrative to justify a little bit more of a push up with US dollar, and then cuts will come, and when the cuts come, you'll see it drive back down. Now, look, it doesn't matter. Sorry, not doesn't matter. It doesn't necessarily mean that we are going to be seeing new fresh lows and go down much further. This is also based on sort of what the other central banks are doing, and this is why you need to be at least aware about sort of what the other sort of central banks are doing, because we're seeing, a couple of the other banks sort of set up with scenarios like the ECB mainly, but also I think sort of BOE, where they're sort of also looking to cut. And remember, sort of like, because the DXY is particularly made up majority of euro, but also partially of, a bunch of other ones, yen, Canadian, the Swiss franc, all this kind of stuff. BOE, like the pound, if they're cutting as well, that's going to weaken them. And if they're weakening, then that's obviously going to give a little bit of a push, or at least a balancing for DXY. So at the moment, this was the plan, that we came down here. We saw these negative divergences. This is the great call. If you go back, this is on the, where was this? 24th, so it must have been the Friday there. And I said, look, you know what? We've got a double negative divergence coming. This one was coming off these lows from, last year, those wicks from December and June, or July or so, I can't remember. But that with a negative divergence, and the backside back test of the top side of this little channel it was in, was a good reason that we might be sort of seeing a bit of a low. And then, as I said, came in here. This was the double triple sort of negative divergence, because as you can see, buying pressure came in a little bit stronger. And look, I recorded these as they were happening as well. This isn't hindsight trading. You can go back and sort of see how I how I sort of called these things as they were happening. And I said, look, you got to be wary of these things. And this is why I've been shorting Aussie. I've been sort of a little bit more reluctantly, like smaller sizes, but I've been shorting gold and that through this last week. And, it was a pretty good week for me. It's actually, one of the better weeks that I've had. And that's because the market is so heavily positioned for US dollar destruction. We've got the sort of the fundamental sort of side of things going. Hold on, wait, maybe it's 50, maybe it's not. You've got the idea that the pain trade would be to squeeze it up through here, which is what I said, as this was sort of developing, and also as it was playing out as well. That if we broke these levels, we were going higher, and you can see these levels here where we said sellers were going to be. Sellers came in there. It closed the week very strong. So, we've got a bit of a fundamental side of it, sort of saying, I do think the cuts will cause it to obviously weaken. That's the textbook response. As to whether they sort of then sell into that afterwards, well, that remains to be seen. We've also got NFP coming up this week, so something to be aware of. But the point is that sort of this squeeze coming up through here, as I said, I've been shorting Aussie and I've been sort of shorting gold, and it's worked very well through the last week. So, it's just about that ability to sort of be able to flip and flop on that, and not sort of be like, look, Aussie's been up, I think I showed the other day, 7% from the lows. You know what I mean? It's very hard to step in front of something that is absolutely charging like that. But, that's when you can potentially make some pretty good returns. So anyway, look, that's just a little bit of an overview of what my feeling is moving forward with DXY. The short here and now, though, this is a level in which we've known sellers to be. We can see it time and time again. It's been knocked down. It came up here. They gave it another shot. It closed the week very strong, and they pushed up past here. So, look, end of the week, I always say, you can't really judge a great deal of it, because typically you get more of this kind of price action, very sort of flat, sideways, dribble kind of stuff. This actually, last couple of weeks now, we've had quite sort of like eventful closes to the week, which have been quite strong. And this time we're seeing DXY come through. So, this is where the sellers were. We've seen as they tried to sort of hold it here again, you can see it pushed over the line and they sort of tried to push back, but the buying pressure here is just overcoming this. Whether this is just people covering their shorts, which obviously is buying, or if it's actually sort of people sort of buying moving up, or if it's just sort of people sort of like, taking some profit off their other positions and that, because they're sort of thinking, well, hold on, wait, maybe it's not going to go, 50 basis point, and really maybe it's going to come to the 25 basis point. Whatever that it is, we're looking at the actual technicals in the chart of this here. We had quite a solid close, and we had it above an area where known selling and the sellers have been lurking and sitting. So I would say that we've probably definitely got a little bit more squeeze to come in this. I would say a little bit more upside here. As I said, sort of like this kind of pattern down here up to over here, look, around this sort of 61%, I think could be quite interesting because, if we get up around here, it is another level on a sort of shorter sort of thing. Well, 4 hour, we've seen some selling happening here. But of course, this big green patch through here, if we jump onto the daily, we've got it marked out. This is where the buyers were, remember. This is going back all the way to the start of the year in January. So, you can see them try to defend the line as it came down here. And, thereabouts that zone into as well. Came down and then it just chopped through here. We haven't had a back test of this yet. So, if we look at this on the daily here, there's a very good chance. I mean, look, if they really want to squeeze this, they could take it up to 103. The RSI is there and it supports it. You got very bullish candles here. Like these candles aren't sort of lightening up. These are the kind of candles, you see how small these ones are, and they turn into like these little tight, and then you see the drop down. This is not what we're seeing here. Even these ones coming down, smaller, and then bang, exploding back up. I would say we would probably at minimum have a test of 102 coming, 102 to 102.16. And then sort of really sort of assess how things are looking, how quick it comes to it, what the price action on the lower time frames is as it gets into this kind of zone in this area. If they decide to take it past here, well, you've got some pretty sort of decent little areas, but I would say that you probably want to complete this move coming through here. I mean, V-shapes have just been ridiculous. I've never seen so many V-shapes in like the last couple of weeks. And something could come all the way back up to over here. I mean, there's a lot of people, remember, if they want to sort of just get into them and sort of stop them out, or coming down here, we've got the top side of this falling resistance that we've sort of seen respected starting from back on that last rip around June. You know what I mean? That would be quite a sort of area for them to really drive it up to. Because if you can come in here, you've got then the confluence of, this little, the sort of completion of this move down, so back up here, so people sort of like short into it here. They can come out here, stop them all out. Oh, let me just drag this across. You got the falling resistance, and you've got the high, or you got the highs just above here. So this is really like, I would be surprised if we get here, but at the same time, actually, I wouldn't be overly sort of surprised. So I'm going to put this as price target, but I'm going to put this price target 2. First price target being down here in this sort of 61% range. Now, if we get up into the 61% range here, which I do think we're going to hit, so let's make this price target. We're going to see a reaction back down, like hands down. Like, as I said, this is a known area. We've had sort of buying happening here. We had buying happening here. This is a big break. So really you're coming up just to sort of like retest the underside of that. So you are going to see a pushback guaranteed from here. As to whether that's the top, and we see sort of, as I said, sort of where it goes up here to price target and comes down, or whether we see it come up to the second price target, we're just going to have to wait and see, because you just can't tell, really. You've got to sort of have a look at the sort of the action as it sort of comes in around it. But they're two plausible areas that I could see DXY move, like grinding up towards. But the takeaway from it is they both have upside in the short term, which is what I'm going to be looking for. I'll put this here. A bit of a scrappy chart, which is what I'm going to be looking for as we sort of move into the early part of the week. So with that, we can see that, little short term, it's setting up a little support here. So this line here as well is going to be quite crucial. So if it comes back here and then sort of breaks down through here, then that could be having a discussion there that maybe this first price target was the top, and we're going to be sort of moving back down here. It really sort of depends how fast they come at it, sort of in the early part of the week. But the fact that we've broken through and closed above this little zone here at 101.50, I think very much opens it up for a 102 test. If we get a pullback and a base and a second run at 102, then again, I think we're going even higher. And I think 103, or this sort of falling resistance, is pretty much the area where we sort of be looking after that. So yeah, I think so. Certainly a little bit more squeezing to be done. Okay, we'll flip across to Aussie, because Aussie very much sort of playing out with this kind of idea of it as well. And yes, I'm aware that Aussie isn't part of DXY, but DXY is a barometer, or the way at least I use it, as a barometer for risk and a barometer for sort of like broad US dollar buying across the market. So, you're going to see divergences between how Aussie US is going compared to, say, Euro US. But these kind of things can give you some indications and some sort of like, forward guidance of where you may be seeing these things happening. So Aussie, as I said, over the weekend, or coming into the weekend on the Thursday, Friday sessions, was coming into this wedge. As we know, wedges are reversals. It's sort of stuffed around here a couple of times, excuse me, and it's finally broken. And you can see once it broke here, it really kind of gave way quite strong. So it was quite a strong sort of close into the end of the week there. And I would say that, as I said, with these things, I think we have some more downside to come. And I would be not overly surprised if we could get down. I'd like to get long again from sub 67, which, is, 67, 62 right now. So I would say there's probably some downside coming for Aussie as well, which will provide us, hopefully, some decent buys through these zones. I'll have to sort of update these ones a little bit, but I think 67 is definitely going to get a nice reaction. We've seen it sort of play its part previously. It's a big round number, 67 for it all. So this could be a nice little area for them to get through. But watch what they're doing with DXY. Watch what they're doing with US dollar on a broad sense. If they're driving metals down and we're seeing the flows go into the US dollar, then we could still be seeing further pullbacks to get down here. But as I said on Friday, this isn't the end of the world, because we've had such a mammoth run, as you can see, up through the here, 7.5% from the lows. Go to the highs, pull back. Even if you come back to 66.40, that's from the high was what, 82, almost a 200. It's a 180 point pullback. That still only takes you to the 38% retracement, and 38% retracement, as we know, is that big breakout level. 66.40, I should say, is that big breakout level, which never got the retest. Go back and watch the video on the, what was it, the 16th, or it was probably actually a couple of days before it, but around this week here, 14th, 15th, 16th. And I was saying 66.40 is the breakout level, and if once that goes, Aussie is going to rip. And yes, it did. It took off. So if it comes back here, you've got a retest of this big breakout area, which is a very standard thing to do with breakouts. You've got a 38% retracement, which still keeps it in a very bullish momentum trade. If things pull back 38%, that's not, oh my God, game over. Even if you come back to 61%, look, it's not super strong, but certainly the higher the retracement with a continuation, or at least attempt to move attempt to move back to the highs and for another potential continuation, the stronger the trend. So, 38% is definitely sort of a viable sort of level, and it gives us a breakout retest. So if you give me 66.40, I'm gonna chuck a whack on that for going long. I think as I said, I still think we have new yearly highs coming with Aussie dollar. And again, I'll just go back and recap this. This is what I was showing the other day, that if you look at this move through here, this was when we sort of came off sub 63 back in October, ripped all the way up here. This came back 38%. And what did it do? It did a whole nother leg. It did another, from about 65.30, did another 330 points from a 38% pullback. So there's certainly some room for this to move. And I think if we get a little bit of a pullback here, that could be the one that's charging us up to go towards that 70 cents and punch in some new yearly highs. up above these levels here. So yeah, short term, I think we got a little bit more downside coming. But then I'd say, that's really just sort of providing us with better levels to buy it from. Let some people take some profit if they haven't already. Let it sort of dribble down a bit and then fire back up. Once we get the cuts from the US, from the Fed, that could be the catalyst to see things really kick into gear and go for another move, go for another run. Particularly if we get, for Aussie, if we get some sort of like stronger kind of economic data, it means that sort of like they're already saying, look, there's zero chance of cuts coming this year. Hikes are still part of the conversation, but um, given our sort of CPI recently coming down and coming down a fair bit, that sort of has taken away a little bit of that narrative. But you could certainly see this. But keep an eye on China as well, because we've got the yuan breaking through some major levels. Stronger yuan is better for Aussie because it means that sort of like, there's a bit more demand for that. That means they're recovering a little bit more. If they're recovering, they're like our biggest economic, I mean, they seem to be everybody's bloody biggest economic partner, but they're our biggest economic partner. Maybe them in the US, I don't know, but I'd say probably China. We certainly get impacted a lot from China, and sort of when things go bad for them, well, it goes bad for us. So when it's going well for them, bang, it's well for us. Anyway, so yeah, a little bit short term. We've got in the super short here, we've got the measured move of this wedge. Takes you back down to 67.34. We've seen some previous support come in at this level here as well. So, this could be a little area where we see a little bit of a push up. I think if you do get a bit of a push up from this area here, watch for where it sort of comes up, because I'd say most likely, we've seen a lot of these V-shaped recoveries, but you've broken this trend now. This is one thing that makes you sort of think to be cautious about buying dips or being the first person to buy the dip. Because again, if we reference the last time it did this kind of stuff, as I said, when it was coming down here, you didn't need to be the first one into the trade. There's a part of a trade here, but then it just came back down here and then up and down, up and down, up and down. I mean, this whole section through here, not super long, but that was over a week at the 38%. So I think let it come down, let it chill for a bit. You don't have to be the first one into the party. Like, I think the V shapes are probably going to take a little bit of a cooling off for a bit, because that's how they sort of burn people out. People go, oh look, I've got to buy it first. I've got to be the first one to buy it back in, and then they'll sort of drop it down lower. Bang, they're stopped out. Because the people that are buying in very first are generally the ones that are trying to look at the textbook and go, okay, I put my stop where? And they're the people that they take the money off. So they got to sort of load the coffers a little bit for those sort of people's cash, and then they'll sort of drive it up a bit more. But so I certainly think 67.30 is our first target, so it gives us another 30 points through the start of the week. And around 67, I'm going to start to build a bit of a position. If I get down lower, I'm going to add into it through these buy zones. I'll question this one down here. I'll get closer. I don't think we're going to hit this on Monday, but I'll have a bit of a closer drill down as to sort of, if this is warranted to be a bit of a buy zone. But certainly if we get down to the 66.40, that's where I'm looking to be buying, to sort of be going long. So let's do this. Let's go price target down here. 66.40. All right, flip across gold. Gold's another one. It was trying to sort of get through here, but if we look at this, this is obviously this is why I leave my notes and charts and arrows and that kind of stuff up. We had the negative divergence coming through here. As you can see, the buying pressure was coming straight down as it was coming back to try and make a high. So this was never going to happen, and that's why I caught the short through here. And then we came up, we came up through here again. And even if you just sort of go through and drag a whole new one, actually, let's just do this. If you drag a whole new one from these highs over here to these highs over here, well, do the same up here. This high is this high here. This high, as you can see, it lines up with this bit here, is this high here. Even though it sort of came back up and bounced back up with a very tight sort of V-shaped recovery, it's still a negative divergence. And we know that the sellers are sitting here. This is why we have it marked out with this thing. This is your line. This is where you want to beat. If you want to go to 2600, well, we need a high close above here. And I was saying a 4 hour. 4 hour probably still could work. Depends how far past it goes. but 4 hour past it, but a daily close above 30, 25, 30, 25, 35. Daily close, like a big candle out here. So if we get something that's, won't be this one here, but this is the idea of it. So get an up candle. This is the kind of thing you want to see. A big candle with a close up here. And that means that the sellers, that every time it's got to this level, they've smashed it on the nose, they're depleted. So it's through that level. And this is just takes me back quickly to DXY, because this is exactly what we're seeing here. Sellers, 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 big blue candle, closed out the top. It doesn't mean that this can't come back here, do a little retest, and then sort of run up here. But it means that sort of that, with that confirmation of this big blue candle closing out the top side, that's an indicator that, there's a higher chance, or the odds are tipped in the favor that the sellers there are out of ammunition. And they're saying, look, I've sold enough that I want to sell this level. If I can sell it up here, why not? So that's the candle you want to see when you want to sort of load it up and you want to look for 2600. In the short term, again, I think we have some downside. I think US dollar has some squeezing to be done. We got a negative divergence here. This is on a 4 hour. We got a negative divergence. We had this little sort of rising support with a potential sort of ascending triangle coming up here. This is the squeeze point. This is the time for it to have gone bang and blown out, but it didn't. It got smacked on the nose and closed to the downside. So I think price needs to be punished a little bit more. Look, you are coming into a little bit of a support area. We've seen the buyers have respected this zone. I mean, this is around 2,500 or smack bang on 2,500. So it's a round number. They are trying to hold this little zone here. But I would say that sort of price needs to be punished a little bit more. And I would say that sort of like they may sweep the lows down here. Now, gold, remember, when gold runs, it'll always do a fake out first. Well, not always, but most of the time. See, like these kind of things here. It was about to sort of go. It goes do-do-do, bang, and exploded up. What did it do first? It shot right down here, took out everybody that was there with their little textbook stops and that down here, and then flew up to the top side. You know what I mean? If we look at this little sort of move test over here, stuff around, bang, came down, took out the previous lows. Almost got these ones down here, but right down into this area, took out those previous lows on the wicks. All these people that sort of are looking at their textbooks and going, but it said to put the stop under the low, well, they get taken out, and then you see the move. Same with this little move down here. Bang, comes down lower, and then explodes up first. So, it sort of stands to reason that I would say, even if they are going to go up to 2,600, that they're going to blow it out the bottom first. So if we take out this little one here, and we drag this over here, that gives us 2470. So it gives us another $30 or so at least, sort of to come down to say if they want to just come down, clip it, and then run it back up. So again, I'm not jumping into anything too early. I'm actually, for the first time in a while, not in any gold positions. It's honestly, it's quite hard to trade this part here because remember, we've got this big range that we had. We broke out the top. Really, we're consolidating out the top side here. So the momentum is still very much, look at that. It's still very much bullish, but it doesn't mean that you can't have some short-term, medium-term flushes to drag in some shorts, to stop out some longs before it then gets going. So watch DXY. I think the fact that you've broken through this rising support, I think this is just going to hold here. Maybe you see a little push up here early on sort of Asia, and then you run back down. But I'd certainly be looking for little sells and then sort of reassessing things around the sort of 2480, 2470 zone. I wouldn't mind sort of trying to get long there and then drag that through this kind of level here. Because if you remember, when I can't remember what day, it was one of these ones here, I shorted it through all these highs here. I was saying that sort of like if we come up here and we reject through this area, we could just be seeing this $40 range, which really is just this area through here. So this could just sort of be, it could come down to 85, bang, and then spark back to life, and we could just see more sideways through here. As long as it sort of holds up above this area, above sort of 2470, we're still in breakout consolidation. Momentum is to the upside. If you fail here and then sort of come back down under here and deeper and again higher time frame closes, down underneath sort of say 2470, if you get a sort of close down here in the 2460s, well, I would say we're probably coming a bit lower. And then you're looking around 2430, 2440 to 2430 for the next level, where you could expect a little bit of a push up and a buy. Oh, what? Sorry, it's a bit late here. 11:20. It's not too bad, I suppose. So yeah, I think short term, a little bit of pain. These are the levels I'm paying attention to. If we see DXY go through 102, I think it was 102, whatever the next level was, that first price target that I just marked out at the start of this video. If we see that go through that level and run up to sort of look like it's pushing up to 103, I think that's when you look for the mid twos for your buys, or you look to short it down into this zone over here. Certainly if you get a close down under here, I think this is a 30, 40 buck easy run to come back down to this zone over here to sort of before you start to flip and get long again and move up. All right, and across on copper, and yeah, look, it's pretty much playing to the thing. We said we were going to have some trouble here. Why? Because this is where the buyers were. The buyers tried to hold it here, and I go over this time and time again. Buy support and resistance. It's the same thing, and we're seeing it come back over here. So yeah, this is the area. I think again, look at the video. It was on the Wednesday. I said, look at it. We're going to have trouble here. Went into it, and then bang. And this is why I've made a new little zone up here. And look, we're just going to consolidate and chill out here for a little while. With these ones, again, you break underneath 416, underneath this zone, then I think we kind of be looking for a back test of this falling resistance. End of the day, the fact that it's come out of this falling resistance, I don't think means that so I'll start that again. The fact that it's come out of the falling resistance, I think means that we are destined to go higher. But one thing with copper is that, you know, it loves to screw with you even more than, say, gold or any of this kind of stuff does. Because remember, if we go back and have a look, when we came out of this big one, remember, sort of this is the big falling resistance that we had, which supported, I don't know, for like 2 years or something like this. So when was it? Setting up from March 22, and then we broke out in November 23, so 18 months, and look at what it did. It broke out and just grinded sideways. And even just before it, let me take the pictures off for a sec. Look at this. This is the start of the big break. Here. Mum said put my textbook stops under here. Bang, they all get smashed, and then away it runs. So, just because we've broken out and haven't just flown up straight away doesn't mean anything with copper. Copper will come out, it'll find its range, it'll suck up as much as it can, and then it can run. Look, it could have even come back down over here. I mean, this was the little sort of inverted head and shoulders we had with that neckline. And this is the thing, remember, when that neckline broke, I was just on my way to Japan, and it ran. And look at the move afterwards, all the way up here. So the fact that we've sort of come out of it, I think sort of means that, okay, that's proven something. You know what I mean? Like if they really wanted to drive this down lower here, they would have sort of defended this layer. They would have sold into all this energy over here, and they would have driven it down over here. So I think it's a matter of time that we do actually sort of come back up over here. 470, we may not go all the way to the highs, but certainly I think that, we've got some upside potential. So in short, it's a buy at dips kind of situation. You don't have to buy the dip straight away. You don't have to buy it as soon as it makes a new low. But if it does come down for the new lows, particularly around these kind of areas that were previously marked out, so like, 405 to 410, I think they're definitely good buying opportunities because it'll be a back test of this falling resistance. And I think that'll be the springboard and move up here. And again, look at the stronger yuan. If China's sort of picking up and they're actually sort of bouncing back a little bit, demand's going to be up for this kind of stuff for copper. It's one of the most used sort of metals in sort of manufacturing. Speaking of which, we've also got silver. And silver, as we saw, came back into the buy zone. And, this is why I have these things here. And so look, it attempted to get out of this little sort of resistance area, but let's update that. Let's put you here. Delete him a bit and see if we can line this up a little bit. And all of a sudden, you got this 1, 2, 3, 1, 2. This is starting to look like a little channel down here. So, you know what I mean? Again, you would have wanted to hold this through here. So I did actually take a starter long position in silver as it came back down into my buy zone. But as I said, with these other metals and everything sort of getting a bit of a copping a bit of a whack, we could be seeing a little bit lower. But ultimately, I do think we come back up to test this big sort of falling resistance through here. We got very close to it, but obviously, yep, just failed down a little bit there. So I think silver's just mainly just going to wait for gold to do its thing. We've seen it back in this zone over here. Again, look, this is sellers. We've got buyers here. And again, bang, and this is why I got long with a starter over here. And I'll sort of be watching to sort of see how it goes. If we can get back out of this new updated channel here, so, you know, back up above sort of say 29.40, really, I suppose you'd want to get above 29.60. So let's actually put that over there. Let's put a little zone in there. 29.60. Get back over here. I mean, you're pretty much already back up to the top there already anyway. But again, you're out of the little downtrend channel. You're above the swing highs. And that's when you're going up to your 30 plus. And finally, just finish off with one. As we saw, big breakdown here. Big breakdown. So it continues to come down here. It did actually sort of melt down quite quickly, but as you can see, it's trying to sort of hold the lows here. So the next move we're looking for is this little move here up to here. Retest this support area because, you know, all the people that tried to hold it, well, they'll be getting out once they get a chance to get out for even here. So I think this means, again, some US dollar strength early in the week at least, and then maybe it overshoots. Maybe it comes back up into this zone over here. You know what I mean? But certainly I think that we've got some short-term, you know, I mean, look, it's oversold. It's ticking back up. It's found, you know, four-hour wicks here. It's closed, you know, not strong, but, you know, certainly if it has to be a bearish or a bullish kind of candle there, it's moving a little bit sort of like it wants to push a little bit higher. So I think this could be a little bit of a back test, and it could possibly even overshoot, complete this area here up into this top of this green side over here, and then sort of come back down here. But again, like I still maintain, you know, 690 to 7 for my price target. Yeah, for the first, sorry, price target for China, and 690 down here, 690 and 7. Yeah, they're the two there. All right, cool. So that's it there. Coming into the start of the week, we've got a little bit of Aussie data, nothing too, inflation gauge. Job advertisements. Again, if we see some strong data for Aussie, it'll be positive, and we'll see some moves up. Weak data there is going to be sort of going, okay, into the camp of cutting rates sooner than rather than later. Like, it doesn't matter what these things. I mean, no bit of data or no one bit of data at the moment is going to sway their decision. But again, you plug in these little pieces of the puzzle, and you may get little intra-session pushes of volume in certain directions based on how those sort of bits of information sort of fall into whether dovish or hawkish. So, yeah, interesting to watch enough, but again, nothing too much. Asia session on Mondays, we know, isn't really too much. Caxton manufacturing PMI for China, that's probably one to watch. Where we are, 11:45 on Monday. 50 is your baseline, so we're seeing a little bit of a tick up here. Again, look for these sort of things. If we see a big tick above 50, that's expansion. Further away from 50, the bigger the expansion. So, you know, if we see that, we're going to see one push. If we see one push, that's obviously going to be more in the bullish camp for the Aussie. The rest of this, we've got a bit of sort of PMI action happening sort of later in the day in Euro session. Canada and US bank holiday, so this may affect things a little bit as well, sort of just a little bit slower with the markets. Look, bank holidays can be interesting because it can go one of two ways. It can either be, okay, there's no volume, so we're not really going to see too much, or it can be like, well, they're not at their desk, and while they're not at their desk, well, that means moves can just, there's nobody to be taking the other side of it. So while you see sort of, you know, something really hammering one direction, there's nobody at the desk to buy it or to take profit or to sort of balance out these positions. So one to watch. If we start to see things moving fast early, I would say we're probably going to see that continue through the whole session. But again, it could also just mean that things are very quiet. particularly US being the holiday. So I'm going to be watching for that sort of early volume to sort of see how things are reacting. Tuesday, not really too much. We've got ISM data for US on the Wednesday. Again, another one of these ones, 50 is the baseline for it all. PMI is supposed to tick up a little bit there. So again, stronger data for the US at the moment is stronger for the US dollar. It seems like, oh, hold on, well, of course that'll make sense, but it's not, because it's sort of like, sometimes sort of like, stronger data can be sort of more hawkish, or sometimes it can be more dovish as to how the market, what the market's priced for and what the market's expecting and what the market sort of think could be the potential outcomes of that kind of stuff. But the way that the landscape is at the moment is that, 25 base point, 50 base point, 50 base point will be based off weak economic data. So if we see weak economic data out of the US, then that's going to be more in the camp of a 50 base point, 50 base point cut. I don't think the 50 base point cut is going to come, but that is how the markets are going to react to it. That's the point. GDP for Aussie on Wednesday 11:30. Slight tick up there. Again, stronger data will be better for Aussie. And then we've got sort of jolts coming over there and a little bit of a tick down. And then I think the big one, well, not I think, I know the big one. We've got ISM services actually on Thursday night, but the big one is NFP, first Friday of the month, as always. So this is going to be the big one that the market's looking for. Now, just a quick thing, just before I finish, on those numbers with the like sort of non-farm and all this kind of stuff, we had that massive revision with the US. What, a week ago, 2 weeks ago, week and a half ago, so recently, where they said, whoops, sorry, we actually sort of got 800,000 jobs more than we expected, or than what we told people. So these kind of numbers you have to take with a grain of salt and salt. But again, the market will react how it reacts. So get a low number here, US dollar's going to be smacked back down. That could be the start of the catalyst for that leg back down. Remember, if I sort of go back onto this quickly, this is what we're looking for. We're looking for a leg up, but then this leg down here, and maybe sort of super weak numbers with the NFP could see the start of this move, this one or this one, driving back down. So, it's important to sort of see at what stage do they get to that. And look, I think that's about it. All right, beautiful. That's it for me. Ciao.